Hey everyone, I'm Ed here with Down to Trade. I'm always looking for ways to find ways to benefit all of you and or add value to your trading day. Well, today really is no different. I believe any options trader is going to find great value in this video, and it could be a game changer for your overall option strategy. I'm pleased to welcome Troy McNeil. Now, Troy is one of the founders and developers of Options Omega. It's a backtesting platform. And Troy, it's great to have you with us today.
Honor to be here. I appreciate you having me.
Absolutely. So for those of you who might not be familiar, I had the chance to try out Options Omega, the software, and I have to say I'm more than impressed. Historically, in order for me to analyze a strategy, I had to kind of download the data and write a long script, a painstaking script, in order to, like I said, analyze the data with the parameters that I was specifically looking for because I couldn't find a robust enough program which had all of the features that I needed. And as you all know, recently I heard about Options Omega and its capabilities, and I tried it out, and I've got to say, good on you. You've done a great job with it, and I'm absolutely sold. It's such a great time saver. So Troy, could you do us a favor? Tell us a little bit about yourself, your background, and what really inspired you to create Options Omega.
Yeah, no, again, I appreciate you having me this morning. I'm a developer, Troy McNeil, and worked for a company for a number of years as a software developer. And me and my buddy, who also happened to be my boss, we got into trading options like many people while at work.
Right.
Slow times we would trade options in the morning and things like that. And I had back tested a lot through the years, different programs. Um, and our long story short, our company got bought out, and we thought, well, we'll just trade options for a living. That's what we'll do. And so I found a back tester and found a strategy I like, and this strategy was going to make me a zillionaire like in 1 year. Is the perfect strategy. And
Right.
I started trading it, and something terrible happened. It did not match the back testing results that I was seeing. Dug in a little bit more and realized that they were using what they call end of day data. So
Okay.
what they would do, they would take a market snapshot at 350 every day, and
Hmm.
whatever the option prices were, that was the day's trade values, basically. Um,
Wow.
if you've ever traded options for 1 second, you realize that that's not going to work. It's crazy that they even did that to me.
Right.
So but going into a higher time frame, or sorry, a lower time frame, like a minute or 10 minute or 15 minutes, seemed very, very difficult. And so we kind of, me and my boss, we kind of took it upon ourselves to try to figure this out. And it was very, very difficult, to be honest. And it's a difficult programming challenge because of the amount of data. So just
Hmm.
options data, it's different than futures data in the sense that you have so many inputs that affect price, and you have to have those inputs. And so um for those who are into programming, it's well over 1 trillion rows of data. So how do you do that in a way that's fast and accurate and things like that? And we felt blessed enough that we kept working on it, and we kind of made a breakthrough. And that was Option Omega. And so we used it for ourselves. It's a tool for ourselves. And
Okay.
once we did it, we realized, oh, there's probably other people that would find this useful as well.
A
So
little
we
bit.
kind of,
A little bit. Yeah.
yeah, so we put some lipstick on it and made it a real product, and here we are.
I love it. I love it. Okay. And how long has Options Omega been around?
It launched in March of 2022.
Gotcha. Okay.
So 2 years in March.
Well, congratulations on
I
what's
appreciate
coming
it.
up on your 2 year anniversary.
Thank you. Yeah, it's been a fun journey, and I've got to talk to a lot of my heroes in the option space and just meet a ton of people, and traveled to Europe and talked about options with Germans and things like that. And it's been a
I
fun
love it.
journey.
That's great.
Yeah.
That's awesome. Okay, well, tell you what, if you don't mind, what I'll do is I'll give you access if you're ready. I'll give you access so that way you can share your screen, and if you can, kind of let's start with the basics. Could you, I don't know, provide an overview of what Options Omega does and how it can benefit traders?
Sure thing. Yeah, let me
Okay, give me a second. Let me
the old host disabled the screen share. I have to
right.
do this every time I host a Zoom.
There
Yeah,
you go, sir. You're all set.
let me try it here. I'm still saying,
Oh, is it really?
yeah, for some
Try
reason.
that again.
Oh, while the other person's sharing.
Oh, okay. Here.
This is funny. I host a Zoom every week, and I literally have to do the same thing every time. Cracks me up. Okay. All right. Can you guys see my screen?
Yes, sir. Yep.
Okay.
Perfect.
So this is Option Mega. This is the dashboard, and it basically how it works is, and we can go through everything, but you have back tests, and we will talk about portfolio here in a minute. But the idea of a test is a strategy that you want to run through time. And so I try to get the caveats out of the way up front, just so people understand what it's doing. We don't do adjusted trades. So for instance, I have some of my option mentors do like a 45-day butterfly, and they'll do adjustments as they go. We don't do adjustments yet. Not to say we won't do them, but we have not done them yet. But what we do is we try to iterate very quickly through a bunch of data for automated try to strategy. So if you had not set it and forget it, but nothing that you're adjusting, and I'll show you what I mean by that. But so these are a number of tests I have, and what I thought I'd do today is just kind of show you that you guys kind of get the early thing, because our Discord, we do a show called Year to Date, and where we go through trades, and as the year goes on, we try to see what's working year to date in options land. And
Nice.
today shows at 2 p.m., but you guys are going to get the basics of it so far.
All right.
So, but before I do that, we'll just show you kind of a test, and we'll just go through it. We use 1 minute data. We launched with 15-minute data, went to
Okay.
5-minute data, and now we're at 1 minute data. And we go back to 2013. So basically, you can
Okay.
test option strategies on a per minute level back to 2013. And we have some nice little buttons because most people want to do some specific things. So they want to see what happened during COVID. They want to see the last year, last 2 years, since the beginning of SPX dailies, things like that. But you can go back to 2013. And so we also have a number of tickers, and people are always asking for more, but right now we can do SPX, SPY, IWM, the Qs, Apple, and Tesla. Why those? Simply because they're the most liquid options in the world. We have had a lot of requests for RUT and others like that. I love RUT. I have traded RUT in the past. The liquidity on RUT just isn't there. We
Mhm.
hope it will be. But with a back test in particular, you really want to get a good sense of trust in it. And the only way we know to do that is by using really liquid options. Um, so this is what we've started with. And what you can do is basically the way it works is we have a set of like preset strategies that you could do. You could go through it and say, I just want to do a call. I just want to do an iron condor. And we'll
Okay.
kind of preset that for you. But
Gotcha.
you can also build them out, anything you want, really, up to 8 legs. And
Okay.
so, for instance, let's say you wanted to sell a put spread, a 20-point put spread. And so what we're going to do is we're going to sell a put, just one of them, and you can do it by delta. You can do it by percentage out of the money. You can do it by collecting a fixed premium. So
Wow.
I want to
Okay.
collect $1 per leg.
Hmm.
Or you could say, I want to sell it 25 points away or something like that. For this one, we'll just do this. We'll do a 25 delta. And you can do the amount of days you want. For instance, for this one, we'll just show you 0 day. And you can do this 2 ways. So for like a 25 delta put spread that's 20 wide, you could do it. When you're trading options, you don't know, once you have that 25 delta, you don't know what 20 points is going to be. So what we do is we have this button here, and it links the leg. And then you can buy whatever put is 20 points below this parent leg.
Got it. That's fantastic.
And so you can also use exact DTE if you only want to do 0 day, which is what I'll do in this case, or it would find the nearest one.
Okay.
You can also round the strike to the nearest hundredth, if you want to try to target more liquid strikes. But we'll leave
Okay.
that off right now.
Fair
And
enough.
then
Because
this,
in my mind, we're talking about SPX, so there's certainly that certainly wouldn't be necessary for SPX, but SPY
right,
perhaps.
right, exactly. And so the funds and allocation, basically how it works is we start with, you can start with any amount of money you want in the account, which that'd be great, wouldn't it, in real life, if that was the
Right.
case? But, it defaults to 100,000. And you can allocate a specific amount per trade
Got
that
it.
you want to test. And so I'm doing 100% and I'm overriding that right now by you can do max contracts. So like I only ever want to trade one of these at a
Got
time.
it.
Um,
Okay.
for longer dated things, you could also have max open trade. So if you're running, say for instance, like a 90-day strategy and you're putting them on every day, well, you probably would want to have a max number of positions on. If that's the
Right.
case, you could say like 10 at a time, you know.
Gotcha.
And if you did that, you could then prune the oldest one if you wanted to. So instead of waiting to put another one on until the parameters are closed, you could just take the oldest one off if you want every time.
Got it.
Um,
Okay.
and then you can do a max allocation amount per trade. So you could say like, I only want to spend up to $1,000 per trade, whatever that gets me. So different ways to do it. And then with the entry conditions, we start from 932 to 359. The reason for that is we have the data for 930, but it's crappy data, to be honest, because if you've ever traded right at market open, prices are crazy. And
It's
so
too wild.
uh,
Right.
it's too wild. So we try to limit that for your own sake. Um, and so you can use entry time, but you can also do a couple different things. You could do, if you want to do multiple of these throughout the day, you could actually add up to 20 times. So you could say, for instance, I want to sell iron condor every 30 minutes throughout the day. You could test that.
Gotcha.
And I'll talk about floating entry in a second. You could do daily, so every day. You could do weekly, where you test certain days of the week. You could do monthly. So if you wanted to target like OPEX
Gotcha.
today, for instance, you could test that. Or you can do specific dates. If you have some dates in mind that you want to go in and test, it's an ISO format. So you just put an ISO format list of those dates.
Gotcha. Okay.
Then we have some parameters that you say like you want to enter. So you could say, I only want to do this when the VIX is at least 11 or at
Right.
least 15 or 20. Or I only want to do this when the VIX is at a max of like 15. I don't want to do this when it trades when VIX is in high vol.
Right.
You could do an overnight move in the VIX, or you could do a VIX 9-day VIX ratio, and that would just kind of show short term versus long term volatility a little bit.
Interesting.
Also have technical indicators, so you could do RSI, SMA, and EMA. And with the SMA and EMA, you can do a comparison as well. So you could go below or above, or you could compare. So you could say, I only want to do when the 5 is greater than the 6 or something like that.
Gotcha.
Um,
Okay.
you can also use gaps. So you could test what happens when the market opens 1%. I want to test a trade out when the market opens up 1%, or when the market opens up up at all, like 0.1, you could do that. Like any move
Right.
up, I want to test it.
Hmm.
You could also enter on intraday. So you could say, let's say I want to open a test anytime the market moves up 1% intraday. I want to put a test on. Same thing, remove down. And then you could use squeeze metrics. I don't know if you guys are familiar with that. Some Gamma Madness. You can look up their website, but they've been kind enough to share their kind of nightly feed with us, so we can test that as well.
Okay.
And then you can use an opening range breakout. This is our newest feature. So you could say, a lot of opening range breakout strategies are, let's say 9:30 to 10:30.
Right.
And you could say, I want to test the high breakout only, right? And so basically that means starting at 10:30, if we break out, I want to test this. And so you could do that as well.
Can you choose both directions for that breakout?
Yep, you can do high and low as well.
Okay, got it. Okay, great.
Profit loss gets crazy because you basically could take a profit at like 10%. You could do that by percentage, by a fixed profit, or you could set like a closing order. So for instance, if you know you're collecting $1, you could set the closing order for 50 cents, something like that. Stop loss thing, same thing. If you do a stop loss, you can also do it per leg instead of the total order. You can also use intraminute stops basically, and intraminute stops basically means that instead of the 1 minute data, we'll do the high low of the minute and do the stop loss that way.
Gotcha.
That
Wow,
gets a little
that's actually really neat. I like that.
It
The
gets
intermittent
crazy.
stops.
It gets crazy. You can also use a trailing stop. We just had
Okay.
like a 18-hour conversation with a bunch of people. It's tricky. Trailing stop is tricky because it really is broker dependent.
Okay.
I think we use kind of the industry standard, but I know there's certain brokerages that do trailing stops very different. But basically, if your brokerage allows a trailing stop order on options, you could test that as well.
Gotcha.
And then show profit action. Instead of closing the whole thing, you could say, at 10%, I want to close 50% of the 50% of the trades. And I could then adjust my stop loss if I have a stop loss, or you could keep that off. You could say at 50%, I want to close the other 50. That's how I
Gotcha.
want to do it. Exit conditions are very similar to entry. I'll say this about real quick, go back to the floating entry time. If you wanted to test instead of opening at a certain amount of, so by default, you pick a time that you'd open. And if any of your entry conditions are hit at that time, we put it on. You can also use floating entry time, which basically says if any of these entry conditions are hit at any time, just put it on at that time. Does that make sense?
Oh, so you have to either enter a time or choose floating.
Yeah,
Is that
exactly.
correct?
And
Okay.
the if you do floating, you would need to have some sort of entry criteria below here in the entry conditions.
Gotcha. Okay.
So, we'll default it right now. And then exit conditions, very similar. The one difference is underlying price movement. You could do when the price moves up a certain percentage or points, or you could use delta. You could say, I want to exit when the delta, let's say this is a 25 delta. I don't even know what this would be. Maybe you're, I'm guessing, maybe you're positive delta seven deltas per trade on this. Well, I want to exit when I'm 4 deltas positive, or when I'm 4 negative. You could test that as well.
Gotcha. Okay.
And then with this one, skip this one here. You could say when the put, since this is a put spread, when we're within, 5 points of the put of the short, I want to get out. So you could test that.
Oh, on the underlying. Got it.
On the
Okay.
under, yeah.
Yeah. Okay.
And this is what we call the Punisher section, the miscellaneous, because this is where your trade really becomes realistic in our mind. You have commissions and fees, so that's going to be broker dependent. You can also add slippage, which is going to be trade dependent, right? Certain trades are going to have more slippage than other trades.
Sure.
And so you could use slippage as well. I'm going to turn those off and then turn them back on in a second just to show you. You could also ignore trades with a wide bid ask. So like during COVID, especially, there was a lot of days where, liquidity was getting wonky. And so the bid ask was spreading a lot. You could ignore those. I don't remember off the top of my head, and I could get it to you if anybody's interested, but or it's in our documentation what the wide bid ask. We have like a metric we use for that, but I don't remember off the top of my head. This is for basically saying if you, let's say you have that 90-day strategy you're running every day. When the test is done, when we go through all of time and we're to your end date, if you still have trades on, do you want us just to close those, or do you want to
Ah,
like say those are just, we don't know what that would have been, and so you could test
gotcha.
that. This is super useful for if you're collecting premium. So you could say, I'm selling this 25 delta put spread, but I only want to do it if I can get at least $1. Don't put this on if I don't get at least $1.
Gotcha. Okay.
And so you can test that as well. Short long ratio is a little confusing, but basically it's short premium divided by the total long premium.
Fair
So
enough.
if you're doing like double calendars, it gets interesting. Um, and then blackout dates are days that you would just want to ignore. So a lot of people have a list of dates they put in for like FOMC or Fed days, Fed
Mhm.
announcement days. They'll skip those days. The re-enter trades after exit is interesting because you re-enter after the trade closes based on an exit condition. So you could say like, if I get stopped out here, we have no exit conditions right now, so it wouldn't. But let's say I had a stop loss. You could say at the stop loss, I want to, delay re-entering by 2 minutes and put a bunch of caveats, but otherwise it would put the same trade on again. So in some ways it'd be kind of like adjusting. It'd be rolling down.
With the
Um,
original, is it with the original enter
it's the
criteria?
That's right, the original entry
Okay.
criteria. So, and then we have a custom CSV file upload that you can do. And
Hmm.
basically, this gets really wonky. It's super complicated. But if you're using like trading view strategies or indicators, there's a way you could actually download that CSV data from TradingView and put it through our criteria. It's on our documentation page. And you could test either open and closing times based on that, or you could test specific put strategy or specific strikes that you wanted to buy based on those indicators. And so
Wow. Okay.
before we had opening range breakout, this is what I would do. I would create my opening range breakout strategy in TradingView, download it, and then test it on here. And so that just gives you a lot of, there's people who do VWAP strategies and Option Omega. There's people who do like special kind of EMA strategies that we don't have. So the sky's really the limit of what you could do from testing, which we think is pretty cool. It's pretty powerful, but it's definitely an advanced feature. So don't feel bad if you look at it and you're like, I have no idea what I'm doing. You just read our documentation. We have a lot of videos on it and things like that.
Outstanding.
Um,
Okay.
so I'm going to run this real quick. This is year to date, so it won't be a long time. And while I'm running this, I'm going to light my cigar again.
This is
Okay.
amazing, the way, Troy. Every time I was sitting there thinking, I wonder if it can do this criteria. Well, you covered it. There it was. So,
Right.
Well,
I was
thank
thinking the
you.
same thing, Jason.
I appreciate it. So this is the year to date test, and this is perfect. This is what I was hoping would be the case. So we say year to date, I would be a genius, right?
Right.
Like if I just did a put spread. I mean, I'm Warren Buffett
Yeah,
Jr.
100%.
So I'll show you kind of some of the pitfalls that people run into with
Right.
testing. So they see a strategy like this and they say, I'm a genius. I want to do this. Will be my strategy. This is my go-getter strategy. Well, let's make it more realistic. And we really like to, our kind of motto is you should feel so confident about the test, like make the test so hard that if it's successful, you have a lot of confidence in real life.
Right.
Because real life is always harder than a test. And so let's first off put some commissions on it. So like Tasty, I think it's for SPX would be like $1.70 opening, 70 closing. And let's say slippage was 5 cents on entry and exit.
Right.
So let's run that real quick and see. Okay, sweet. Still so far so good.
Yep.
Now let's do this. That's one contract. Let's run 100% and see what it would be.
Ah, okay.
100% allocation, putting a max, just all in. Okay, we're still geniuses so far. So
Yeah,
here's where it
crazy
gets.
geniuses.
That's right. So here's where it gets really. This is where real life breaks in. When I'm looking at this, and someone sent this to me and said, "Hey, I want to teach a course on this strategy. I've come up with the perfect strategy," and they
Oh,
sent this to me. I would say, "Okay, well, let's do this." let's do, instead of year to date, where you get 12 trades, let's do the last year. So 23 to 24 and run that and see what it looks like.
Wow,
Okay.
quite a difference. Wow.
Quite a difference. And what's interesting, I mean, you look at this from a logarithmic, you definitely had a lot. I'm gonna mute.
Yeah.
I'm gonna
Is that 1,200?
oh, yeah. You almost got up to 1,000,002, right? And
Oh,
then you
okay.
just
Sorry, I'm
you
reading
gave
wrong.
it all back. Even with what's hilarious, you gave it all back with a with only 16. You only got 4 more because you went bankrupt. And so let's look at this. You only lost once, but when you lost it all,
Wow.
right? And so what that would say is you're going through it and like trying to test this, like, well, I definitely don't want to do 100% allocation. Let's do a 50% allocation and see if we can survive and what that would look like. Okay. So that's still not great. Let's go back to like a 10% allocation now. Just start super small and see what this would be. Okay. So what this shows in my mind is that it's not been a great trade
Right.
year to date. I mean, you win a ton, and we can go through these metrics real quick. So basically, they're pretty straightforward. You know, you got your underlying, your dates, your strategy, your entry conditions, if you had exit conditions, those, and then your miscellaneous section.
Mm-hmm.
And then we give you the P&L, CAGR, your max drawdown, and MAR ratio. MAR basically is your drawdown divided by your CAGR, or vice versa. But basically,
Gotcha.
you're higher. The higher the MAR means the higher your win rate was versus your drawdown.
Okay.
We give you how much money you started with, you know, things like that, and then your average per trade, and then your max, and then we'll give you the average minutes in trade because this is 0 day. Because you're riding it to expiration, you're riding it all the way to expiration.
Got it. Okay.
So that's the tester in a nutshell, and we can keep going through it. But any questions so far?
I mean, I love that you're talking about the pitfalls, because that's going to be the bread and butter of what's going to make a trader successful with your platform or not, right? As we all know, you
That's
can
right.
over optimize, but you can also under optimize. You can
That's right.
It can be dangerous because, like you said, everyone gets those starry eyes when they see the results,
That's right.
and we've all done it, absolutely. But yes, when you start uh, putting in parameters that are much more realistic to real life, it can be eye opening. So I appreciate you going through some of these pitfalls.
No, I appreciate it. Yeah, I mean, we have about 2,200 people in our Discord, and so a lot of people, that we have a cycle that happens where people join Option Omega, they're pumped, they find their winner,
Right?
and then someone who is kind for them beats it up for them and tells them,
Yeah,
like,
that's good.
go
That's
back to the
good.
drawing board. So
No,
anyway,
I love it. I love it because that's what someone should do.
that's our
I,
goal. Yeah,
yeah,
help each other.
absolutely. Okay. Um. So I was kind of curious. So we have some members from our options trade room in attendance, and obviously, would you be willing to take some questions and possibly I don't know, run some scenarios that anyone might have?
Sure thing. Yeah.
I appreciate it. Thank you. Obviously, everyone in the room, if you have any questions, now's your time. We've got the expert on board. Let's pick his brain. While
I
we're
saw
waiting for what's that?
I saw Neil in the chat say, if you had to
Oh, I
choose
did.
one metric to compare strategies, would MAR be best? Yes. Yes, MAR would be the way you look at it, especially through time. There's some caveats to that. Like MAR, I'll tell you the downfall of MAR, and then the plus. The plus is, in general, yes, that is the category you'd want. There are some strategies where, let me see if I can find one real quick. Just, I'm amongst friends here with trading, so let me do this real quick. Let me see if I can find that. Yeah, interesting. I named this one interesting because of this Mar dichotomy. So this is a trade. That's a little complicated, but nothing crazy. This is run from 2016 to last week. It's opening range breakout, but it's a weird opening range breakout. I said if we've stayed in range all day, so from 9:30 to 3, and at 3 we break out of whatever range we've been in all day, to the upside only, the high only, and every Monday, Tuesday, Thursday, Friday. Wednesdays don't work because Fed days, basically. If we do that anytime in 15 minutes, between 3 and 3:15, I'm going to buy a call that's 100 points above wherever we're at 5 days out.
Okay.
I'm going to sell 2 calls 10 points above that. And I'm going to buy a call 50 points above wherever this is. So it's basically like a 40, it's offset butterfly. It's a broken wing butterfly.
A little bit offset, right?
Yeah. And
Yeah.
the exit conditions are I close 25 at 100% profit, 25 at 500, 25 at 1,000, 25 at 2,000. And I have all the stuff put on, right? I require 2 hits at the profit target. I do all this. I beat it up. Well, all it does is win, right? Which is crazy.
Right.
But you look at it and the MAR is very, very low. Why is that the case? Well, a couple things are happening. MAR also takes into consideration time. So this is a 6-year strategy. There's definitely trades that you would make a lot more than this in 6 years. And because of that time factor, the MAR ratio is low. But personally speaking, I would trade. I don't mind the low MAR for this type of strategy because you're only doing it 37 times in 6 years. Does that make sense at all?
Gotcha. Right.
So if that answers, that was a long-winded answer to that question, but MAR is great. MAR, I will show you one more just for the sake of it. We did our every year at the end of the year, we do trades of the year, where we go and we look and find like the best trades, that we think. And so, let me combine it with last year. So this is a double calendar put on Fridays at 3:30 p.m. Only when VIX is below 30.
Got it.
This is a crazy test considering it's 12 months, but it's like the MAR. I would trust that, right? That would be not. I say trust. Options and for all risks are not suitable for all investors, but
Right.
from the test, it's a pretty incredible test in my mind. So
can we take a look at the, for instance, what the trade log looks like one more time?
Sure.
I didn't want to get an idea.
Yeah, I didn't go into this at all. So thank you. So basically, we'll show you what time you put it on, what the opening price of the underlying was, what legs you ended up buying, the premium you paid, and then what the closing price was of the underlying, what time it closed, and then the closing cost. And we'll give you the reason for it. So if you hit your profit target, we'll show you the margin. In this case, because this is a VIX dependent trade, we'll show you the VIX during that. We'll show you how much movement there was, and then we'll give you your max loss and max profit. You can also filter this by the winners only or the losers.
Oh, nice. Okay.
And you can also download this as a CSV if you wanted to do more research. And then I can't believe Rusty, one of my partners would be mad at me if I didn't show you this. This is a trade replay. You can click on each trade and we'll show you your trade in yellow, the underlyings, the SPX, what it did, and what VIX was doing during that process.
Wow. Okay.
Holy cow.
That's fantastic.
So if you would, it helps to dig in sometimes when you're like, what, because trade options are confusing sometimes. It's complicated. So you can dig in a little bit more about what happened, you know.
Right. Okay. I love it. I
So
appreciate that.
yeah,
Um,
sure thing.
Cody was asking, so obviously the market climate changes. How would you go about recognizing the market is changing and thus we need to modify or update the strategy?
Great question. So the example I use of that is the first year to date we did, our trades of the year of 2022. Most of those trades sucked in 2023. Um, does that make it a bad trade or something you can't test? I used to go into this thinking this is one thing Option Omega's taught me a little bit is when I first was trading, I would imagine that a test that you could run back to 2013 was the only valid test if it worked for that long. And I've come to the conclusion that it's a little more nuanced than that, that there are certainly markets that change. Markets are changing all the time. And so certain strategies are going to just outperform during certain times. So how do you know when it's time to test that? What I would say is you keep running your tests. You also, if it's a trade that you're actually doing, let's say for instance, the test is giving you, you know, let's use a year to date one because I wouldn't trust these. I don't trust the trade that you put on 10 times. Like I wouldn't, you know, like that. This will get more beneficial to me as the year goes on. But let's say, for instance, right now, year to date, buying a call works, right? That's a strategy that works pretty well. Pretty good MAR. And that one thing I'll say too is people get really funny because they're like, only an MAR of 17. Honestly, like a hedge fund, if they had an MAR of 1.5 over 6 years, that's a great strategy. So
Okay.
MAR, you know, don't get fooled by the high MAR rates. Like that's an incredible thing. But how would I know if it's done, you know, if buying a call doesn't work in that instance? Let's say, for instance, I would say probably right now the drawdown's very low for
Mm-hmm.
this type of trade in particular. If that MAR starts going down below 10, I wouldn't want to do this. So this is kind of a cop out, but to say you kind of really do have to like keep playing with it and
Mm-hmm.
using it, and then also watching the market and saying, well, double calendars just aren't. My drawdown just much higher than what the test has been. The
Right.
test, I believe, will confirm that through time. Like if you
Mhm.
keep rerunning it through time, it'll show the drawdown happening. And so that's like any strategy, you kind of have to keep going from there, if that makes sense.
Absolutely. I love it. One of the things I discuss in the trade room quite a bit is the idea that the market shifts beneath us all the time. And so you have to be ready and willing and able to properly adjust your parameters of your strategy to suit the needs of the market at that time. Because what worked a year ago might not necessarily work now. I mean, even 6 months ago is not going to necessarily work now. So I love the thought process there. So I very much appreciate that. He also asks, um, how do the indicator entries function? Will there be any other indicators added, or will you ever add? All right, can't read that. Market internals for SPX like tick and advanced decline line.
Great questions. We are always adding things and we're always kind of looking for it. And it's not like a community vote, but we have a pretty large Discord and we pay attention to kind of what everyone's asking for. Um, we are working on a feature right now that I can't tell you, but it's going to be really cool. It's super hard and people have asked for it for a long time. So that's the way we kind of approach it. So tick level data, breath, things like that. I think that would be awesome personally. I trade some of those kind of things personally. But no promises. It's kind of just dependent on, we have about 400 things a day people ask for. So we kind of have uh, to prioritize it.
Right.
To the question about how these work, how the indicators work, I personally don't use kind of indicator stuff a lot, but let me just show you real quick how this would work. So let's take this. Instead of buying a call, let's use floating entry time and let's use EMA And let's say I want to put this on anytime the 5 minute is greater than the 6 minute. So
Okay.
now instead of just putting on at 9:32, it's going to run it a lot more times. Let's see here. Yeah, so if you look at the times now, it's not just 9:32, you get 9:54, 9:59, you get things like that. And so it's running it only when that 5 minute EMA is greater than the 6 minute EMA. And because you actually run it a lot more, I'll show you real quick. You're only doing one at a time, but let's take that off and let's do like a 10% allocation
Okay.
and do it again. And then let's do this real quick. Let's say, let's have a reason to get out. Let's say stop loss of 50%.
Fair enough.
Okay. And then what we're going to do now is because we have that reason to get out, we're going to re-enter the trade. So we're going to say, if it expired, delay it by 1 minute and do it again. So if that's the case, what's funny is this year to date, it's so hard to show this year to date because it just keeps winning because we have had a kind of crazy market so far. Let me do it this way. Let me sell a put 25 delta, buy a put 20 points below that. And do it more time. Year to date, it's just not going to work for it. Let's do the last 30 days. So the last 30 days, it kind of shows in real time what we're talking about. This is not a great trade as long as when you put more time to it. But year to date, you're like, oh, this is awesome. If that makes sense. So that's how you would do it. That's the other way you could do this. Instead of the stop loss, let's do the exit criteria is this. Since we're comparing the EMA, let's get out when the 6 minutes greater than the 5 minute.
Okay.
So that's a little bit better.
A little bit better, right?
At that point. Right. And then let's re-enter the trade at the EMA exit. There you go. That's what I was looking for. So if you re-enter it, every time that happens, you're putting a lot more trades in.
Right.
That's what I was looking for. So
you went from about
don't know if
20 to about 420.
right. But yeah, great question. So that's how you would trade that. You use those indicators for that type of way.
I love it. Jason's asking, and Joe, I'll get to your next question there, but Jason's asking, automated bot trading coming in the future?
I will say this, there's a lot to that. It's
Right.
the most complicated problem one could work on at this point, and we are in process. That's
Fair
all
enough.
I can say about it. So.
Okay, I love it. So Joe's asking, Joe listed it looks like a trade that someone posted, and he's asking, what am I missing on this one? Seems too good to be true.
Let me look at it real quick. Can you see? I don't know if you can see that, what I just clicked on.
Yes. Yeah, we can see the it looks like Monday PCS.
Perfect.
The name of
Okay.
it? Yes.
So let's take a look. Put credit spread, a 20 delta, put credit spread, put on at 9:32, 10 points wide every Monday.
How far back? So this is just, this is the year of 2023. Got it. Okay.
Mm-hmm. VIX, min, max 100. One thing straight away, I mean, that's great criteria. You don't need that just because VIX is going to fall into.
So you can completely delete that parameter.
Yeah, but
get the VIX to show in the report, in the results.
Oh, smart. Yeah. In that case, that's for sure. Hey, we have a pro level user right here. That's awesome.
If I had any losses, I could then like see if the VIX was what was affecting the loss. So I just use that as a way to get it to be in the data.
No, that's
Love it.
awesome. You have opening closing fees, you have true profit. Yep. So here's the only thing I would test it. We'll do it. So if you think about it, to make it the most robust, if you had a profit target, you want to ensure that the profit target's hit twice. That just we didn't get into that, but I'll show you that real quick. So let's say
The nice thing about these is that there's no profit target. I'm letting them expire.
I agree. I agree completely. Yeah. But let's just say, for instance, just to do it, you had a 10% profit target. This require 2 hits of profit target basically looks at 2 time intervals, and it will take the first one, but it basically just ensures that that profit target was actually hit twice. And so that's super useful for a lot of calendars, because if you've ever traded a calendar, it'll hover around your price point where your exit for a long time, but it'll never actually hit in real life. And so that's just a way to make it real conservative. But I'll say this, the stop loss is actually the opposite. To make it more conservative, you would actually not require that. You would say, anytime it gets stopped, I want to assume I got stopped
Right.
out
Immediately.
and
Right.
immediately. And so we'll run that. I don't think it's going to make a huge difference. Yeah, it doesn't. Stop loss 200%. How would we beat that up a little bit? We could say, actually, there's not much you could do to beat that up. That's pretty good. Is it Jason? Is that right?
Joe. This is Joe.
Pretty good. Joe,
Joe.
sorry. Pretty good, Joe. Not gonna lie. Pretty good. You have the main thing is this stuff right here, and you have no profit target, so that's pretty good.
Right.
Have you
So
have you
can you
traded?
take a look at the trade log for me, if you don't mind?
Sure.
I was kind of curious. And this is, I'll be honest with you, this is somewhat synonymous with how we did this several years back, where we were putting it on at the same time every single day. Times were easier back then, but it is interesting to see how this actually worked in 2023. I'm actually surprised by it.
The other one, just looking at it, 12% is a realistic allocation. So I'm beating it up on purpose. So don't take this for anything. Never put 100% to anything.
Right.
But,
Absolutely. 100% agree.
yeah. I mean, so what that reveals to me, anytime you do that, is that, like, personally speaking, options involve risks, not suitable for all investors. Everything presented is educational purposes only.
Right.
This is a pretty. What's that?
That you've got that phrase memorized.
Oh,
You
certainly.
say it enough. It's
I say it to my wife, like, she's just like, "Hey, you were sleeping and you said that options involve risks. What do you mean by that?" I'm like, don't worry about it. Just, yeah. So personally speaking, I would look at this and I'd say, okay, the allocation, you can change the allocation and it doesn't affect it. You can do all these things. Only other thing you could do really to say, make it more, test 935, test some different times right around that time frame to make sure that the data is not doing something wonky right there. So this is really kind of like the thing of options trading. Still a great strategy, through the testing process. But the time makes a difference. And here's the thing: people go back and forth. It's like, well, should it not make that big a difference? The reality is, like, yes and no. In options land, there are certain times that it makes a huge difference. Like, sometimes the difference between 3:50 p.m. when MOC data comes out and 3:51 is a big difference, right? And so that doesn't scare me at all. But that'd be one thing to test it, is to try different time frames. Like 933, could try 933 and see what it does. Overall, it's a really good test, Yeah, something like that 1 minute difference. So MAR is still pretty historic, So no, that's a great test, Joe.
Did you click on the summary? I want to take a look at the profile, the Pinot profile again. Click on the summary.
Oh, sorry. Yeah.
Okay.
Oh,
Oh, that's
so
logarithmic. Okay.
yeah, so that's pretty good. And then I want to find real quick. Yeah, one of the losers. Let's do the trade replay. And so the trade price, because you're selling, you don't want the trade price to go up, right? So what happened? This was just a day where we dropped down 30 points. And so that's pretty realistic, right? I mean,
Right.
that makes sense. I want to do that. Help me remember that date real quick, which was August 21st. Let's go back to 9:32. Actually, let's do this real quick. I'm getting real nerdy right now, but the opening price was 43.84 at 9:33, August 21.
Okay. I
So
don't.
is that three points below where it was a minute later?
Yeah.
So in that one, did the trade go down? Let's see, the price went down while the trade went up. So you went up, right? But you didn't get enough to get stopped out. That's the difference. Just 1 minute made that difference. And you can see that where like you got pretty close, right? You got to 150% right there.
I'm sure a lot of it has
If
to do with the IV contraction that's
That's just
occurring in the first 10 minutes of the day.
100%. And you won't be able to see it much on here, probably not at all. But VIX, went up a little bit and then slowly it did what you needed it to do.
Exactly. Exactly.
Yeah. Yeah.
So
Nope, that's a good.
I think you're just putting IV in your corner by just getting in there 1 or 2 minutes earlier. But it's fascinating to actually see the difference. I wouldn't have guessed there would have been that much of a difference.
Yeah, no, it's funny how it works. And I will say this, we have noticed in Option Omega land, half of the trades of the year we presented last year, Mondays and Fridays have worked really well for a lot of strategies.
Wow. Okay.
Mondays in particular, if you can go on our YouTube and watch the trades of the year show, and I talk about this, that the half of the trades were just Monday trades.
I love Mondays.
And
Mondays are my favorite day to trade. I'm kind of surprised to hear you say Fridays though.
Certain Fridays at the end of the day going into the Monday. So this is a Monday trade. That got second place, in trades of the year.
Outstanding.
So that's a Friday trade. That's a Monday, Tuesday, Thursday, Friday trade. Yeah. So there's a lot of Mondays going on that work pretty well. But
Troy,
anyway.
let me ask you this. So obviously these are fantastically set up, and I love all the analysis that you get from the actual conclusion of the test. How are the traders that that use this on a daily basis? How are they performing when actually conducting real life trades with real money? How are they performing?
Well, I'll say this. We believe in the data that we have, and
Right.
we think that it's pretty accurate. So we have not had many instances where someone said the drawdown doesn't match what my trade was. Pretty often, most often the trade will match. If you trade it live, it will match. The next day, we update it in the middle of the night, and so you can see yesterday's trades today. It's pretty close. There are certain strategies right now that just aren't working that have worked well. So I know a lot of tranche traders, tranche meaning like they're putting on multiple condors throughout the day. I know the last week or two has been pretty rough for them, just because we've had a lot of intraday movement.
Right.
But that, in my mind, is kind of a strategy dependent thing, and that's a high win rate strategy, and you'll have a high drawdown sometimes, and that's just kind of the trade off of it. There's other people who trade double calendars, butterflies, things like that, and I think at any given week in the market, half of them are losing and half of them are winning. But that's the beauty of it, is you have a trade, you have a test, and the goal of it is to simply say, like, the higher iterations you have, the more data you have, the greater your chance that you feel confident in doing it. And so most trades are going to have drawdowns. That's just part of life. And
Oh, absolutely. Absolutely.
yeah, it's trying to figure out what type of trader you are and have confidence. And so, for instance, I'll show you kind of see if I can find something that I kind of like. I don't even know what this is. Troy's for reals. Okay, this is one I made. Looks like last year a little bit. These are the type of things that I like to do, personally speaking. Is I do a lot of butterflies.
Okay.
And so, you know, MAR is not awesome, but I'm not a put seller. Like I don't. There's different types of strategies that people like. There's people who do a lot better than I do, but I know for myself, I feel very comfortable with butterflies, and so these are the type of trades that I enjoy doing the most.
Gotcha.
And so part of it in my mind is just knowing yourself, knowing the type of person you are, and then feeling confident in it.
I wanted to ask, can you share how can someone, if they're interested, get a copy of Options Omega? I do know that if they use the promo code down to trade, I believe they get a 50% discount off for the first year. Is that correct?
Yeah. In fact, let me real quick. If you go to optionomega.com/register/down to trade, it'll apply that automatically for you.
Gotcha.
So
Okay.
instead of $100 a month, it's 50% off your first year.
Okay. And what I'll do, everybody, is I'm going to add that to Discord in the partners channel, in the new partners channel. I'll just add that link. That way, if anyone is interested, you can get that promo, that 50% promo. This interview will be uploaded to YouTube, so you can rewatch it over and over and over as necessary. I know I'm going to watch it a handful of times personally, just to kind of help me get an idea of, just kind of get a better grasp of what was taught today. But other than that, again, Troy, thank you so much for everything. I appreciate all your time today. Fantastic.
No, it was an
program,
honor.
bud.
It was an honor to have you, and I want to have you on one of our cigar lounge shows that we do. So
Let's do it. Absolutely.
So,
Sounds like a deal, buddy.
all right.
All right, everybody.
All right,
Thank
guys.
you again. It's been a pleasure. Until next time, take care. Happy trading.